We are going to calculate cost of goods sold and ending merchandise inventory now using the LIFO method. So we have the same transactions. The only difference is we will do last in, first out method of calculating our cost of goods sold and our ending inventory. And then of course we'll use that to calculate gross profit, which is what the problem asks for, right? It asks for cost of goods sold, ending merchandise inventory, and gross profit. Okay, so under LIFO, we have to keep it in order because we're going to use the last in as the first out this time. So the first thing that happens isn't really a transaction, it's just that we have a balance of 35 sofas. So quantity is 35 and unit cost, it tells us, is 700 per sofa. 700 times 35 is still 24,500, so that doesn't change. Alright, so there you go, that's our inventory on hand. The next thing that happens is we make a purchase, right? So that's got to go in the purchases column. So that's going to go as quantity 25, unit cost 750, 25 times 750 is 18,750. So now we update our inventory because, right, we've added 25 sofas to our inventory and it's important to keep it in order. So here's our first ones in, 35 at 700 for 24,500. Now we add our 25 at 750 for 18,750, and when you add that all together, it's 43,250. Okay, so that's our inventory now. And now this is our last in, this is our first in. So far everything's the same. Purchases, beginning inventory isn't really going to be any different. What is different under LIFO is when you do a sale. Now remember, this is the price. This 1,400 here is not our cost, right? What we purchase it for is our cost. This is the price that we sell it for. It becomes our revenue. So we don't really care about that right now. So we're going to sell 30 sofas. So which 30 sofas do we sell? Well, under last in, we start with the last ones in, so that's these 25. So we sell 25 at 750, and that's 18,750. But we still need 5 more sofas to get to 30, so we're going to sell 5 of those. 5 at 700 is 3,500, right? And of course you add that up, and your total cost of goods sold for that sale is 22,250. Alright, so this is our cost of goods sold for that sale using LIFO method. So now, as always, every time something happens here, we have to update our merchandise inventory. So we no longer have any of those. And what we have left is 30 of those, right? Because we sold 5, so 35 minus 5 leaves us 30 at 700. So 30 times 700 is 21,000. And of course we'll put that 21,000 over here. So right now in inventory we have 30 $700 sofas and our inventory is $21,000 balance. Alright, what happens next? On the 18th we make a purchase. 50 sofas at $775 each. So in our purchases column, we put 50, unit cost, $775, that's a 050. 50 times 775 is 38,750. Right? And we got to update, right? So first in is these, so keeping them in order, 30 at 700 is 21,000. Now we've got these 50 at 775 for 38,750, and of course you add those together and they're 59,750. Okay, so here's our inventory now. And the last thing that happens is we sell 35 sofas. And again, we don't care about that 1,400, that's the sales price. We're calculating costs. Alright, so we're selling 35, so which 35? Well, last in, so here we go. Well, we can cover it all with this. We're going to sell 35 of the 775 ones. So 35 times 775 is 27,125. Alright, so there's our cost of goods sold for that purchase, 27,125. So what does that leave us in terms of inventory? Well, we've still got these 30 because we didn't sell any of those. 30 at 721,000. And out of these 50, we have 15 left. Right? And they cost us $775 each. Right? So 15 times 775 is 11,625. And you add that together and you get 32,625. Alright, so now we want to go through and get our totals because we need that. So on the purchases, well, we purchased 75 and we have a total cost of $57,500. Alright, on the sales, we still sold 65, right? That didn't change. But this time, when we add the two costs of goods sold, 22,250 plus 27,125, our total cost of goods sold ends up being 49,375. And that's the first answer we're looking for. Right there, cost of goods sold. Okay, next. Merchandise inventory. Well, we have 45 left, and they're 32,625. I'm sorry, we have 45. Yeah, and that, of course, is my ending inventory right there. So we got two of the answers. Cost of goods sold and ending inventory are right there. The last answer that it's looking for is gross profit. Alright, so we know from our income statement that sales revenue minus cost of goods sold is equal to gross profit. So we know what cost of goods sold is, right? We know it's 49,375. And sales revenue is equal to the number of units sold times price per unit. Alright, so units times price. So we got 65 units, right? We sold 65, and the price is $1,400. So that is equal to 91,000, which is the same as, I mean, that's not going to change. That's the same as when we do LIFO, right? So 91,000 is the sales revenue. So sales revenue minus cost of goods sold equals 41,625. And that's my gross profit. That's the last part of the problem right there. So assuming you have a problem like this, you may or may not. This is not one of the guarantees, but if you do, cost of goods sold, ending inventory, and gross profit are what the question's looking for. We just do this chart to help us get the right numbers.